Imagine having a portfolio that consistently grows in value over time, despite market fluctuations. For instance, investing in a diversified mix of stocks, such as Apple, Microsoft, and Johnson & Johnson. Welcome to our video on unlocking the secret to consistent equity growth forever. Are you tired of watching your investments fluctuate wildly, never knowing when the next downturn will occur? Do you dream of building long-term wealth, but struggle to find the right strategy? Consistent equity growth is the holy grail of investing, allowing you to build wealth over time without sacrificing your peace of mind. The first step to achieving consistent equity growth is to understand the importance of diversification. By spreading your investments across different asset classes, you can reduce your risk and increase your potential for long-term growth. For example, a study by Harvard Business Review found that investors who diversified their portfolios across different sectors and geographies outperformed those who did not. Additionally, having a mix of low-risk and high-risk investments can help you weather market fluctuations. To achieve consistent equity growth, it's essential to understand the power of compounding. Compounding is the process of generating earnings on your investments, and then reinvesting those earnings to create a snowball effect. For instance, let's consider an example where you invest $1,000 in a stock with a 10% annual return. At the end of the first year, you'll have $1,100. In the second year, you'll earn 10% on the new total of $1,100, resulting in $1,210. As you can see, the return starts. It's also important to have a solid understanding of the companies you're investing in. This includes analyzing their financials, management team, and industry trends. By doing your research and staying informed, you can make more informed investment decisions and avoid costly mistakes. For instance, a study found that investors who conducted thorough research on the companies they invested in outperformed those who did not. Moreover, staying up to date with market news and trends can help you identify potential opportunities and risks. Now that we've covered the foundational principles of long-term investing, it's essential to discuss the role of diversification in achieving consistent equity growth. Let's consider a real-life example to illustrate this point. Suppose you invested $10,000 in a single stock, and it performed exceptionally well, yielding a 20% return in the first year. However, in the second year, the stock's value plummeted by 30% due to unforeseen market conditions. This significant loss would not only erase your initial gains but also reduce your principal investment. To achieve consistent equity growth, it's essential to adopt a long-term perspective and avoid making emotional decisions based on short-term market fluctuations. For instance, consider the story of Warren Buffett, who has consistently demonstrated the power of patience and persistence in investing. Despite experiencing significant setbacks, including a 50% decline in his net worth during the 2008 financial crisis, Buffett remained committed to his investment strategy and ultimately emerged stronger. Similarly, investors who held onto their equity holdings during the dot-com bubble and the subsequent crash. To unlock the secret to consistent equity growth forever, it's crucial to adopt a long-term perspective and diversify your investment portfolio. Consider investing in a mix of low-cost index funds and dividend-paying stocks, such as Johnson & Johnson or Procter & Gamble, which have a history of consistently paying dividends. Additionally, take advantage of tax-advantaged retirement accounts like 401k or IRA, and aim to contribute at least 10% to 15% of your income towards your investments each month. By following these strategies, you can potentially achieve consistent equity growth and secure your financial future. In conclusion, achieving consistent equity growth requires a combination of knowledge, discipline, and patience. By understanding the importance of diversification, having a long-term perspective, and staying informed, you can unlock the secret to consistent equity growth forever. Remember to stay focused, disciplined, and patient, and you'll be on your way to achieving long-term financial success.